All right, we're going to get into it. So today, we're going to talk about top-down analysis. We're going to have other people on this call talking about divergence. Jamie's going to cover that. We're going to have success stories. We're going to talk discipline, goals, and mindset. And then, of course, we're going to answer questions and have people ask their questions, and we're all going to share our answers. So, number one, when we begin with trading, we always do a top-down analysis. Top-down analysis means that what you are doing, structure. That is the style of trading that this group does. Once you know market structure, you are good to go. So I'm going to go over the basic recipe. You guys got to remember, we are investors, okay? We're not here to work for somebody and make somebody else money. You are an investor, and your job as an investor is three things. I say three things. Box in price, respond to price, know what you are willing to lose. That is your job as an investor. And that is the basic recipe for market structure. Very easy, very simple. When it comes to what you need when it comes to trading, you gotta, number one, identify the overall trend. These are the ingredients when it comes to you doing your trading. Number two, identify when the market will be making its move. Number three, entry into trade. It's very simple. It's just 1, 2, 3 steps. When you're identifying the overall trend is what we're going to cover tonight. That is monthly, weekly, daily. It tells you what the market will be doing. This is how we get our high probability trades, and we're not chasing pips in the market. Now you have a few utensils that you're going to use. You're going to use trend lines, rectangle, horizontal rays, horizontal lines, and Fibonacci. There are other tools you can use, but we strictly use trend lines, rectangle, horizontal lines, and rays. You as a trader, the first thing you will actually learn is how to draw a correct trend line, which we're going to go over today. Final thing I want you guys to know is that the market moves, and it only moves in 3 ways: impulse, correction, continuation. Impulse, correction, continuation. Impulse, correction, continuation. Impulse, correction, continuation. Okay? The market moves only in these 3 ways. Now, you can also say the market moves up, down, and sideways. That's still impulse, correction, continuation. Impulse, correction, continuation. When you look at the chart, that is all you should be looking for. Impulse, correction, continuation. I'm saying this over and over again because if you get this in your mind, you will be a very successful trader. Impulse, correction, continuation. Now let me go ahead and share my screen, and we're going to mark up a pair. Let me see. I'm going to do a new share, and I am going to share my new share, my screen, and I thought I had this open for you guys, but I don't. TradingView. This is the place that I go to use to mark up charts. If you use anything else like MT4, that is okay. I started off using MT4, but I graduated over to TradingView because TradingView is so much better. Okay, so right now we have the US dollar, Japanese yen. As you can see, I have it all marked up. And in my markups, I'm going to actually clear this for you guys and start from the beginning. So
I don't see your screen. You're not sharing your screen. It just says Mahogani.
thank you so much. Let me do that again.
She's sharing it. I could see it.
Do you see my screen, guys?
Yes, I
Yes,
see
I
you.
can see it.
Yes.
Now I see the screen.
Yeah, we can see it. Yes.
Thank you.
Yes,
Thank you. Okay, everybody, go ahead and mute yourself right now as I begin. And thank you for letting me know. I appreciate that. You guys are my eyes and ears. I can't do this without you. So whoever let me know, thank you so much. Okay, so as we are trading, you gotta. Thank you, Sheila. So as we are trading, you have to understand. Trading charts are like reading a book. And I'm going to repeat what you've already heard because what you've already heard is the truth. Trading is like reading a book. If you're at the month, it's like you're reading the summary of the book. If you're at 1 minute, you're reading one word. You have to analyze a chart from a top-down analysis. So we begin at the monthly so we can start to analyze what is going on with the market. And as we analyze, I am looking for what's going on currently. So I'm at my monthly time frame. Now again, monthly time frame, monthly, weekly, daily is telling you what the market, the overall trend of the market. So we're starting from the monthly. I am going to box in price. I'm going to put price in this area because I see that on my monthly, this is where it's made its lowest point. Okay? This is below my price. Here, I'm going to put a box at the top because this right here is currently where price is at, in between here. All of this stuff in the back, this happened billions of years ago, and at this very moment, price is not up here, price is not down here, price is not over here, price is within here. Now, please know, with the tools that you have, you can use anything. If you want to use a horizontal ray, you can put it there. If you want to use a horizontal ray, you can put it there. You can use any tool to box in price. Even if you just want to put a line, you can put a line there. You can use any tool that you want, okay? But I prefer to use on my higher time frames, to mark my zones, I prefer to use my rectangles. Now I have my supply zone and my demand zone. Supply means that people are selling here. When you go to a store, they are supplying you with something. That means they are selling you something. So in this area right here, this is where price is selling. Demand, you are the customer. You are demanding their product. You will buy their product. This is where people have been buying. Now I'm going to go to my next time frame, which is weekly. And I'm going to look here, and this is the place where I like to put my trend line if my trend line is necessary. Here, for me, I can clearly see that we are in an uptrend. I'm going to take my trend line, and I'm going to draw an uptrend. For those who know, when you are doing a trend line, you have to have a minimum of how many touches? Who knows the answer? How many minimum touches do you need for a trend line?
Two.
Dos.
Yes, we got people on here who know. You need a minimum of 2 points to connect. That will let you know and qualify as a trend. So I have 3 touches here. So who knows, two points to qualify a trend line, and then how many points to actually qualify it as a trend?
3.
3.
Yes, yes. Yes, we have our seasoned veterans on here, and I'm sure some newbies was answering too. You have to 2 touches qualify the trend line, 3 touches qualify the trend. So I have 3 touches, which qualifies this as an uptrend. So what I like to do is I'm always looking at my mid zone. I want to see in between these 2 points, where has the market in this little space continuously hit and kind of divided it. If you look here, I see that in this area, price fell here, pushed back up. It fell through, pushed back up. It came back down, and then it didn't go through. Came down, it did push down, it came back up. Here, there was some stagnation. Came on top, and it held it up. Came over here, pushed through. Came through here, and it held over. So this is my middle area where I'm seeing market is dividing both of these areas. And this is just what I like to do. Again, if you want to, you can also put a horizontal ray. You can put a line. I want everybody to know that these types of tools is about what you like and what makes you feel comfortable. So now that I'm here and I have these information in here, I'm going to now go to the daily time frame. I'm going to scrunch this up a bit. As I'm on my daily time frame, what I am doing is I'm looking over here currently, and I'm looking in between this area. And what I like to do is I like to put areas where price has come to close to current price action. Price action is here, and I'm seeing that this is an area where price action was holding up, and on top of price action, where's a place where price action was getting stalled out. As you can see, price action is actually right here in the space where price typically stalls out. I'm looking back. It's here. It hit and it fell back down. It hit, fell down, it came back up. Here it hit, fell down. Here it held it up. Here it held it up. Here it held it down. So this area has many places that it has divided. Most recently, look what happened here. It hit here and it fell down. It came back up and it fell down again. So that means I've already gotten to my daily chart, and I already have a place of resistance where I'm feeling, and the market is telling me that it may push down. Now, I've done monthly, weekly, and daily. What I want to share with you is something that was shared with me that I want to share with you when it comes to monthly, weekly, and daily. Let me go up. Monthly, weekly, daily tells me what the market will be doing. Some traders, they mark up here, and on the daily time frame, they trade from this daily time frame. Swing traders, they make a lot of money, they get a lot of pips. That is what we do here. We make a lot of money, we get a lot of pips. You go to the mid time frames, H4 and H1, this will tell me what the market is starting to do. Now, right now, I have saw what the market is telling me it's going to do. Now I'm going to go to the H4 and H1. It's going to tell me what the market is starting to do. Okay? I just marked up what the market will be doing. I'm seeing that it's possible that it'll go down. H4 is my next time frame. This is now going to tell me what the market is starting to do. I'm creating my setup. Okay? So I'm going to go to the 4-hour. As I'm here, as you can see, I probably can move, not probably, but I will move this up. I'm moving this up because as I get closer to price action, I'm always looking left, and look what I saw here to my left. All this action that was held down here. And what I'm doing is saying that this is an area where price action was held down. And I'm feeling that in this area, even though we have some other little wicks here, we have some wicks going on, and this right here actually closed a little bit on the line with the wick up. I'm seeing it going down, but I don't know. Again, it tells me what the market is starting to do. So as I am here, now I want to look at my trend line, and I'm boxing in price further. When I look here, I'm going to take the closest area. And right now it's in an uptrend. With me marking this uptrend, this line right here, trend line. If price breaks the trend line, it is signaling a change in the trend. It is called a trend line. That means we're drawing the line to signal the trend. I drew the line on the bottom because this is an uptrend. So I'm drawing it at the bottom of price going up. So my current trend currently is up. And when this price action candles break this line, it's now telling me that the trend has broken. It can break this line. It can kind of go a little below this line and shoot back up. But this line is telling me the trend. Just like this line right here is telling me that this is an uptrend. Currently, current price action, it's telling me that we're still in my uptrend. Now, I want to show you something. Look at this. Price was in a downtrend. This was a downtrend. This right here would be more current for me. I would draw this. And let me do this so you guys can see. There we go. This right here was a downtrend. I have my two connecting factors. 1, 2. This says the trend line is confirmed. And my third touch will say the trend line was that it was a downtrend. So I had 1 touch, 2 touch, 3 touch. And then look at that. When at this touch, it actually fell down. And look at here, even though it went up and it finally broke the trend line, it did come back down, do some retesting, and then go back up. Remember, I drew my downtrend, which means I was making a downtrend. Once it breaks it, it's letting me know that the trend is reversing, which is how we have this uptrend now. So with that being said, let me delete this for you. With that being said, we're going to the current price, and this right here is going up. For me, I'm at a little mid-zone area. I am looking for this to go down, but I can't predict the future. All I can do is wait till it breaks it, right? If I look in the past, not since December has this area been broken. And you know what else I'm gonna do? Because this is something that you guys gotta always understand. It could possibly go and hit here, because look left, look at this big wick. So even though mostly price held down here, I wanna keep my wicks on my higher time frames in focus. Understand that these wicks on the lower time frame, these are actually full candles. So my price action could go all the way up here. So as I do this and I'm boxing in price, I'm now boxing in price a lot more. I've boxed it here, I've boxed it at the bottom, I've boxed it in with my trend line. Now I'm going to the 1 hour. And as I'm looking at the 1 hour, this is a place where I'm now really looking for patterns. I'm looking for patterns on all time frames, but I really look for patterns on day time frame. And I look for it on the 4 hour, and I look for it on the 1 hour. And I look for it below, but when we're here, we're looking at patterns. I could have easily saw this pattern right here. This is a pattern. Does anybody know what this pattern right here is?
And expanding?
Expanding channel? Okay, yes, this is an, yes. You guys are all right. This is an ascending channel. This is an ascending channel, but it's also a flag because look at here. Push down, impulse, correction. We're looking for sometime in the future for do a continuation. It hasn't done it yet. It could very well go all the way to the top before it makes this continuation. But yes, this is a flag, impulse, correction, continuation to come. This is also an ascending channel. That means I've drawn a trend line on the top and the bottom, and they're going up. When you draw an ascending channel, which is part of a flag, always know an ascending channel means a reversal is coming up. So that means most people in this particular move, they are always getting in for sales. They're getting in for sales. Once it gets to the top, they are looking to sell. And look at this. If you're on the daily chart, just going to this zone is 157, going all the way to this line is 222 pips. Always looking for a sale. When it came back up here, they were looking for a sale. Came back up here, they were looking for sales. Now it's pushing up. These right here are two this is a day candle. These are 2 day candles, and they're both this is a pretty big one. This is the, a little I would say it's a pretty aggressive candle too. But let me go back down to my 4 hour. So as you can see, we saw this big flag on a daily time frame. As we get closer and closer to price action, now we are noticing that they're making different patterns within here. Can anybody see any pattern within this?
Yeah.
What pattern? Here on my current price action.
Inverted head and shoulders.
Oh, that is really good. Yes, it is. Look at this. Inverted head and shoulder. Shoulder. I don't want to lose people with this. Shoulder. Oops.
Oh, yeah.
Shoulder. And head.
Yeah. And
That's very correct.
there's another head and shoulder, like where the head is.
Oh, right here, to set this right here.
Uh-huh. Yeah.
That right here, that's patterns within patterns.
Yeah.
That's one thing you guys will always see, patterns within patterns. Is there any more patterns that you guys can see? And I'm only asking you, not what's your pattern? What pattern do you see?
Is that ascending channel for
Yes.
possible?
Yes, we went over that. This whole thing is an ascending channel, which is going to be a possible what?
Downtrend.
Yes, yes, yes. So if you are looking at the chart and you can't see a pattern, please don't force it. Please don't force it. If you do not see a pattern, go to a lower time frame to see what you can see. What I am trying to do is to see who is unmuted. I'm going to mute some people because we're getting a lot of little feedback. All right, and I'm going to cut the rope a co-host so he can help me with that if he's available. Guys, just make sure to keep you on mute unless you have a question. But yes, you are very correct. This is an ascending channel. Now I'm going to go on back down to the 4 hour. I backtrack just so that we can make sure that I understand that, because I'm talking about patterns now. As I look at this, I see
Show your screen, Gigi.
Mahogany, we can't
Mahogany.
see you.
My bad.
Let me. Can you see me now?
Yes.
Okay.
Yes.
Yes.
Great. So as we're making this up, as we're through this trend line, as I'm looking at closer and closer price action, what I'm seeing is a few flags. And I'm going to point this out to you. And like I said, impulse. And let me put this on. Correction. Impulse. Correction. Impulse. And it kind of got a little bit scraggly. I might have to go to a lower time frame to see more. But you guys see what I'm talking about? Even though we're in an ascending channel, within this ascending channel, there's going to always be little patterns. And remember what I said? Whenever you're doing something, you're always going to have impulse, correction, continuation, impulse, correction, continuation. Correction, continuation. So let me make this clear, because the first time I heard it, I wish that somebody would explain it to me because I was so confused. You have, let me get this right. You have impulse, you have correction, you have continuation. Then it goes correction, continuation, correction, continuation. So even though I'm saying impulse, correction, continuation, this continuation is now my next impulse, correction, continuation. This continuation is now my next impulse, correction, continuation. So there, this is still impulse, correction, continuation, correction, continuation, correction, continuation. Same thing, impulse, correction, continuation, correction, I'm sorry, impulse, correction, continuation, impulse, correction, continuation. I hope that is very clear for you, because when they would say impulse, correction, continuation, I'm like, okay, so I want my next impulse, not realizing that that continuation is my next impulse. It is starting that chain over. Let me look in my chats. I'm going to make sure I'm not leaving anybody around. Light bill just went off. Good. Light bulb just went off. That was a double top. I'm not great on patterns. Double top. Double top. It just means that when I was at the lower time frame, see, it hit here, like these right here would be considered, it hit 1, 2, yeah, this is, could be on a lower time frame, could be a triple top. 1, 2, 3, yep, on my 1 hour. This is 1, 2, 3. 1, 2, tree. I said tree. 1, 2, 3. It hit the bottom. This hitting the bottom 3 times is a confirmation that this line right here, these retests, are confirmation that it's going to bounce back up. This is confirming that the buyers have taken over the market and it's going to go up. Yes, impulse correction is like climb and stair. That's a great analogy. Yes, great analogy. Great analogy. Ascending flag forming as well, right? Reversal pattern. Yes. Doesn't mean it's going to reverse right now. That's one thing what people got to understand. When we say it's a reversal pattern, doesn't mean it's about to reverse right now. This reversal pattern is on my day time frame. I can see it clear as day on my day time frame. Impulse, correction. There's going to be a continuation coming, but it's on a daily time frame. So this could be in a month. It could be in a week. It could be in 2 months. We're not saying when it's going to happen. We don't know when it's going to happen, but we know that we are aware of it. We are definitely aware that this right here is expected for it to fall sometime soon. So as I go to a lower time frame, I'm going to skip my 30 and I go up to 15. Now let me go here. Remember, H4 and AH1 tells me the market is starting to do its thing. That means I did my monthly, weekly, daily. It tells me what the market will be doing. When I was on my daily, I'm like, okay, I'm expecting for it to fall down from here. And no matter what you expect, the market will do what it does. It could go to the second line right here, or try to go and do a fake out and go higher before it falls down. But this, in this general area, this is where I'm saying it might fall. And the patterns, I like to say that, wave trader, the patterns, they tell us what the market is going to do and how it's going to do it. Like I said, on my 1 hour, I can show you some flags. When I got on my 15 minutes, you see these flags even better. Look at this impulse, correction, impulse, correction, impulse. Then you have, it's starting to do like up and down. It's kind of like going haywire. When the market starts to kind of go haywire, if you can't see a pattern, and if you don't understand a pattern, do not force it. Just wait for it to start to make a clear pattern. And all these moves are corrective anyway. The difference between an impulsive candle and a corrective candle. Let me show you. These are corrective candles. Why are they corrective? They're small candles. These are impulsive candles. They are big candles. Impulsive candles, corrective candles. Impulsive candles. You have a small little correction here, and it impulses again. corrective candles, the smaller candles. If I go out, then in here, look at this impulse. This is an impulse. And it does this little correction. Does actually, look at it, it goes down and does a retest at the top. Impulsive candles, corrective candles. Hope you guys understand corrective candles. When you go impulse, correction, continuation, the impulse have bigger candles, correction have smaller candles. They're corrective candles. And then impulse is the when the candles get bigger again. And I'm just on my 15-minute, and look what I'm able to see. Now I'm on my 15-minute. I'm going to go to my 4-hour. You see how you have to go to your lower time frame, your 15 and below, to be able to see all this action in here. Because on the 4-hour, remember, it tells me what the market will be doing. On the 15-minute, it tells me when to get in. I'm not looking at my entries. Looking at my entries. Impulse, correction. We get in when the correction is broken. That's okay. So there's a few ways to get in. Now I'm going to share this with you. There is getting in on the break out of a correction. There's getting risky moves when this right here, this is an impulse correction. Correction goes in the opposite direction of the impulse. And then there's this right here is an impulsive move. People can get in at the bottom. Let me make this a little bit better so that we can see this. This is the corrective move. And we know this correction is confirming the up move. So people can get in at the breakout, or people can get in at the risky move, which is here. This is the risky move because in the correction, every time it hits the bottom, we're expecting for a buy to happen. So getting in at the bottom would be kind of your risky move, because who says it's going to break out here and go up? We don't know. So this is definitely a risky move. But people play breakouts. I'm going to go to a lower time frame. I'm going to go here. As I go here, people can play this breakout. It broke out. I like to play breakouts that once it breaks out, it goes ahead and it pulls back to the line, and then it shows me, it's like it breaks out, pulls back, touches this line to confirm, and it goes up. As you can see, if I went down to the 3-minute, that candle did exactly that. But look how I had to go. It broke out, came back, corrected, and then pushed up. I had to go to a really small time frame to see this. But it did. It broke out, came back to retest, and then now it did its thing. Impulse, even on a small time, look at this, even on a small time frame. Impulse, correction, oops, impulse, correction, continuation, correction, continuation, correction, and this is all within flags. You're seeing patterns within patterns within patterns. But starting the 15-minute, guys, this is where we're seeing our entries. And our patterns are our confirmations to get in. Some people use EMAs to confirm when they cross, they get in. Some people use, in conjunction with the EMAs, they use their MACD. When it crosses the MACD, which it has not, look at this, I'm on my 15-minute. It has not crossed this since here. So for anybody using their MACD as a confirmation to get in, it crossed on their MACD at 15, it crossed here, and not at any time did it ever cross below. Somebody in this trade would have made 105 pips in one day in 20 hours. Just because they followed their confirmation. It crossed above, it crossed the 0 on my MACD, and my EMAs crossed, confirmed to get in. It's very close to the bounce back strategy. You guys, How I learned this is because I plugged into IML. I did IML Academy. I went hard on IML Academy. I did quizzes from Baby Pips. I went hard on IML Academy. I went hard on IML TV. I even got a chance to be featured on IML TV with another one of the educators because I showed up to her teachings every single day, watched the replays, practice, and I was getting like 400 pips in a week. Now I'm doing things differently because I don't need to get into 30 trades in 1 week to get to 400 pips. I'm able to do that in 1 or 2 or 3 trades now. But the thing was, I was showing up consistently, IML Academy, IML TV. In order for this to work for you, IML Academy, IML TV. What we're doing here on Forex and Chill, this is just your next level. This is once you get through with understanding all the stuff I'm talking about, this is your next level. And then showing up for Forex and Chill on Mondays and Wednesdays. Showing up for when Gwen is going to have a session. Showing up for IML TV. Marios does the weekly overview on Sundays. Showing up for whatever I decide to do, I'm showing up for them. But I'm getting my education through IML TV, and Gwen and Lindor, they're setting it up to take us further in our education. So what I just did for you guys, it took me a while because I'm doing it for our newbies. I did a top-down analysis, and I showed you in a lower time frame, I got in here. Now, really, as I go to my monthly, I'm trying to kind of see where am I at. This little place right here, what I really want to do is get a bigger move, and I really want to ride this down. So when this breaks this trend line, and on my lower time frame, when I'm seeing clear patterns, impulse, correction, I'll get on that continuation. I want to see this broken. I want to see a correction, and I'm going to get on an impulse. But this may not happen right away. This may continue to go up for a while. I'm looking left. It may surpass this. I'm going to go to a higher time frame. I'm looking left. This could go all, it could go all the way up here. We're always looking left. It could go all the way up here. But I'm seeing that price held down in this area. So I'm going to go with what the market is telling me right now. And right now I'm looking for it to break down. Any quick questions before I start answering some questions about USD, calculating pips, and using MT4? Any questions about the top-down analysis?
Hi, I have a question.
What's up, Sierra?
Hey, so when you went to the corrections and you kind of put it in that white box, how are you able to kind of put that in a like what's happening now type of market? Because I know when you look back, it's easy to, view that pattern. How can I do it now to jump in?
Okay, so let's go back here. So right at this moment, you see how I stopped doing patterns? Because to me, it started to make kind of a janky pattern. I couldn't really get anything out of here. I'm gonna wait till I start to see more patterns. This is all corrective. Even this is all corrective. I'm going to wait and see a pattern before I decide to get in again. For me, I need to see a pattern. And or I also use my EMA cross and my confirmations. If these two lines cross and it crosses on my MACD, I now want to get into my sale. Let me go to a pair that might have something going on. Okay, this is lovely. This is my odd NZD. So I'm on my 15-minute. I'm looking, and when you talked about looking left, your looking left will tell you what's going to happen in your future. So you have to look left to give you a heads up of what's going to happen in the future. But look at my impulse. Then I had my correction. And then this correction actually turned into the price going the opposite way. And I believe it's doing a retesting. So anybody, I want you to go to your odd NZB and I want you to put it on 15 minutes, and I want you to draw a line here. And when the market opens again on Sunday, we want to see that if this goes all the way up here and falls down, I'm looking left. Or this place, it can go all the way up to here and fall down. Why do I say here? Because I have this area right here. It already surpassed this area right here. Because I'm looking left. I look left, this is the highest. I'm looking left, this is the next highest. I'm looking left, I want to, even though this is all the way up here, I'm looking left and I see this back here. So you have to look left to see what pattern is forming in the current. Right now, impulse, correction, and I always say this is a correction / retest. That's what I call it. Meaning that it corrected and the correction is continuing on. The correction is going all the way up here. So now this is turning into a what? What pattern is this, guys?
Bearish flag.
Yes, it is. But what is this exactly? And what did we talk about with ascending channels? What are we expecting from ascending channels?
A reversal.
So I'm expecting for this to come down here. Now, it could come up to here in reverse, or it can come up to here in reverse. I'm not for sure. I'm watching it. I like to go to my 5 minute. I'm still watching it. But as you saw, I had to look left to determine possible places where it could go up to before it fall down. I have to always look left. And this right here, what you'll do is you'll be doing it like when you first start off, it'll be like this because you don't see this information. Your patterns change. This went from a flat flag to an ascending triangle. I'm sorry, an ascending channel. The pattern changed on me. So again, I hope I answered your question. You do have to look left. You have to look in the past to understand what the future is. And I'm looking at my patterns, impulse, correction. Maybe it'll come here. If it passes this, this is the next line. If it passes that, it'll be the next line. It'll be whatever the next high, then the next line, the next place of resistance. Does that answer your question, Sierra?
So when you see it break, the lines that you drew, like the purple line, that's kind of when you know your entry is, because it's reached the second highest candle. And when you see it start going down, you might want to jump in, or is because the correction, it equals a retest. It's the same thing is what I'm getting. So if I see it, hit that second largest candle and I see it start to descend, then that would probably be my cue to like, okay, jump in, grab however many pips and go.
Yes and no. Yes, because this is a place of resistance. It'll push down, ride it. But that's also a risky entry for you. The place, if you're asking that question, the place that you want to get in is once it hits, comes down, breaks this line here. And what you will see is once it breaks it, you can play the breakout. You can play when it breaks out, or you can simply wait for it to correct, retest the other side, and ride it down from here. This place right here, yes, you can get in. Yes, but this is a risky entry because who's to say it hits here and it doesn't keep going? Who's to say it hits here, pulls back, and then comes, and then it hits, falls down, and then pulls back up to here? This is a risky entry. what you want to do and focus on when you're very new, you want to focus on breakouts and or confirmations. Breakout, pullback, continuation. You want to get in on the continuation. People who are very skilled, they will get in on the impulse and ride the impulse as it's going. When you first begin, you want to wait for this correction to happen. And then you want to get in on the impulse. Especially when you're getting in like at a place where you're uncertain about the market. This correction confirms that it's going to impulse again. This correction is the only way that you know for sure that if I were to make the decision to get into the market, this correction, which pulls in the back in the opposite direction of the impulse, is saying that this impulse here is coming. Now this, again, could correct and go up a long time before it actually makes its move down. And usually if you look left and see, oh, okay, it corrected and it was going to retest this area back here. That's why it retested. It was going to retest this area and then fall down. You always want to wait for your correction to get in. Here is for risky, this is for veterans, risky entry. Here is where you want to get in. And yes, you'll lose some pips. Yes, it's okay. You lost 5 pips. It's okay. You didn't get 10 pips. It's okay. You want that breakout, correction, to get in on the continuation. Somebody asked about USD currency and what it does and how it affects things. And I want to answer that, but before I go any further, I want you guys to let this soak in. Top-down analysis, impulse, correction, continuation, flag patterns, patterns that are reversals. I want that to soak in. But what I want to do right now is have Jamie to come and show divergence, because you asked a great question about entering. And he has a strategy with divergence that I'm still working on myself. He is master divergence, eagle eye, hashtag eagle eye, where he will help you understand where you get in at by using some different tools that's going to help you be able to get in for you and help you get confirmations to get in. Because you asked me about getting in here, that's a risky move. Yes, you can. You want to get in down here, but he has tools that he can use that'll tell you exactly where to get in, where he can tell you, okay, getting in here is okay, because he has a tool that's saying what's going to happen and what's coming up. So Jamie, I hope that you are ready to share divergence. Are you over there? Jamie. Let me see if he is here. Jamie, are you ready to share divergence? I'm guessing he is not ready yet. So before I give you anything else, what I want to do, she's waiting on that goal. Before,
Can't see the screen.
Say this again.
Can't see the screen.
So what I want to do, thank you. What I want to do before I go on is give you guys a chance to kind of be able to let what I just shared with you soak in. I'm going to have, I am going to have Andrew. Andrew, are you on? Where is everybody? Walter is on. Okay. So
They might be asleep.
I know. Walter's not asleep. Walter's not asleep. That's the crazy thing.
I'm up. That.
Okay. Yes. Walter is the king of back testing and patterns. Like what I was showing you guys about patterns. We're going to have Walter Where is Andrew? Oh, Andrew's right there. We're going to have Walter come up, and we're going to have Walter share his screen. Are you ready, Walter, to share them with them some patterns?
Let me see.
Hey, Mahogany, while he's sharing his screen, I saw
Mhm.
somebody wanted you to look at their chart. Maybe tonight when you finish and we start recording, you can let people mark up. Maybe that person would like to mark up like we used to.
Oh, yeah, I remember them days. Yes, definitely we're going to do that.
Yeah, I definitely want to get back to doing that.
Mm-hmm. So, Alexis, but that means that what you're going to do is I'm going to let you share your screen later on so you can show us what your markup is and share with us what you feel about what's happening, okay? And anybody else, get ready. Get ready to mark up. Get ready. Are you ready, Walter?
Yeah, I'm ready. I am ready.
Go ahead and share your screen.
Okay.
Thanks, Gigi.
You're welcome. I'm jumping on and off as I can. We're getting ready to have some oxtail delivered, so I'll be off.
I'm jealous.
She just dropped a bomb on everybody with that one.
Right.
Okay, she have an oxtail with billionaires
And I
fixed
see
traders.
Mr. Andrew Maxwell just jumped on. You want him to jump in before water starts, or?
Yes. Okay.
Stopping.
Yeah, go ahead. Thank you so much, Walter, for being flexible. Yes, Andrew, can you share your story, please?
All right, how everybody doing today? My name is Andrew Maxwell. Sorry I'm late, but I just got checked into a hotel right now, Grand Dune. But my story starts off back in last year, January. Got introduced to Forex. And spoke to Steven Salindo and Garrett Roberts. And they were the ones that really basically was talking to me one-on-one after the meeting or seminar. It was like that I should take advantage of this. You know what I mean? What kept me on was that Steven Salindo was in the same demographic as me because I'm from Brooklyn, New York too. So one of the things that kept me going was like, okay, if he did it, I could do it too. Fast forward a little bit in March, that's when I started doing my first trading. But come to find out, the person that signed me up just left me there. So I was doing all the trading myself, but nobody to guide me, no mentor, you know. Fast forward, as you know, I was losing trades, winning trades, but losing more than I was winning. But I was wanted to give up, but I kept pushing. But back in November, I got to a little bit of hardship where it left me homeless for 2 months. And was living under a staircase inside of a hotel that I used to work at. And while I was under there, something put in my spirit to talk to Mama G, Miss Guinevere Ramos. And she would just hit me up like, yo, why you ain't telling about your results and nothing like that? You just quiet. And then so just put in my spirit, just talk to her, let her know what's going on. And I put my situation out there. And like I tell people, anybody else could have been like, oh, well, I hope your situation get better. Holler at you later. But no, she took the chance. It was like, I'm going to get you right. She was like, find some Wi-Fi. And she was going to train me up right there. It only took her 30 minutes to get me right because of the fact that I was doing all my training. And like I said, I had nobody to structure me. So she got me right. And then I took my last $140 after the training. And that was in November. To this current time, I'm up $25,000. I no longer work. Just a month ago, this Friday, actually, I quit my job working at Walmart because of the fact that I was making $1,700 days. And in that same day, I was only getting no more than $80 for Walmart. So I did the math, 2 plus 2, that means I had to quit. That's what it equals up to. So me quitting, now I'm doing this Forex thing and marketing 24/7 hard. So this is my life now. Now I get to take my family, like I said, right now I'm at the Grand Dunes on the beach, chilling, you know what I mean? Life free, carefree, and all thanks to Forex and all thanks to people that looked out and cared for me. So you, the first time in here, you won't regret your decision. But that's my story. Hope somebody else have a story too.
Hey, and Maxwell told me he was going to be my greatest success story. Could you tell him how much I charged you for that training that day?
$0.00.
All right. Bless up.
I mean, if that's a lot to some people, then this ain't for you.
You guys have to understand. He is a story that is not uncommon, but extraordinary. Extraordinary in he had to be in a place where he was like, I got to do better. I have a calling on my life, and where I'm at right now is not where the calling is. You guys have to understand that where he's at, some of you guys may be at, some of you guys may have been there. The difference between you and Andrew was your guys' thinking in that moment. When he was where he was at, his thought process wasn't all about how, oh, look where I'm at, I can't do better. His thought process was on how, what do I need to do? How can I show up? How can I be a part of my success? And he reached out to Gwen. I think that's one thing that we have to all be aware of, is that the only thing difference between you and him is thinking. When he was in that place, he was thinking about how can he rise himself up? How can he ascend? Everybody has that capability.
It's all about mindset.
That is all it's about. That is all it's about. And that is why Andrew is where he is at right this moment, because of his mindset. And as he helps people, it's still about his mindset. As he trades, it's about his mindset. Everybody.
I could have gave up a long time ago, you know what I'm saying? I could have been like, yo, this ain't for me. Oh, this for somebody else. Oh, I'm not white. Oh, I'm not smart. Because I ain't graduated high school. I got a GED. You know what I mean? So if y'all on this call, y'all got a high school diploma in the society, they say you're smarter than me. So therefore, what are you doing that I'm doing so special? You know what I'm saying? It's nothing. It's all about hard work, your dedication, positive vibes. I went to do what I had to do because I needed positive energy around me. You know what I'm saying? You got to take every negative and make it a positive. I don't care what it is. You know what I'm saying? Because positive vibes bring positive energy, which brings positive results. You know what I'm saying? Look, for example, all my jobs I ever worked, I got fired. And now this was the only job that I could say I quit. You know what I'm saying?
Yes.
That I quit.
He fired his boss. Good night.
Hey, don't get it twisted. I was getting fired because I wanted that unemployment check, but I don't need the unemployment check now, you know? But I just want to say this. I say this a lot to people, but if you knew you hearing this for the first time, this is for you. We are meant to be kings and queens, and some are meant to serve them. Which one are you? I'm not meant to serve nobody. Sorry.
Yes. And share where were you at this weekend? I mean, this past few days. You were somewhere with some six-figure traders.
Oh yeah. I was with the big man Stevenson Lindor. He came down here and we did a whole seminar, 2 seminars, one in Pembroke, one in down here in Myrtle Beach. It was a success. Classic, got knowledge, you know what I mean? Did some free training. Everything is knowledge. Knowledge brings money. So if you out here trying to chase a dollar, this ain't for you. If you're trying to get knowledge, then this is for you. That's how you get money. Don't chase money. That's what jobs is for, chasing money.
Yes. See where his thinking got him? He was somewhere where people would count you down and out, but all he needed was his right thinking. That is all you need. And look where he's at. He's learning. He's surrounding himself with six-figure earners. He got Gwen coaching him. I don't know if he's gonna be in Atlanta, but Atlanta this weekend, Gwen is with six-figure earners, $500,000 a month earner. Like, this is not about where you've been. This is about where you're going. With I Am Male, get the knowledge, show up, help other people, you're gonna win. Because right now, Andrew is helping other people get in the same position. It ain't no fun to make all this money and you can't go nowhere with nobody. That's no fun. That's not fun at all. That, like, you chilling, you able to sit there and take trips, and then all your friends, they can't go with you. Share this knowledge. Thinking, thought process. That's all you need. Your mindset. Your mindset will pull you through. Go ahead.
I just want to say this. Your circle means a lot too, because I go by this analogy. If you hang around with 10 dumbasses, who the 11th dumbass? You. If you hang around with 10 millionaires, you can't help but be a millionaire because you're around nothing but winners, you know? So who is your circle? If you're around people on the block all day, or you're around that annoying sister that always complain all day, you're around that annoying cousin that always talk about you can't make it, what do you think? You gotta change the circle. All my friends now, all my real friends is internet friends now. IML, people that do business, you know? All these other people that I asked to come to seminars and all like that, they sitting there, I don't even talk to them no more. Because why? It's no bringing no value to my life. I need value. I need people that want to step it up with me, you know? Because two heads is better than one, right?
Yes. Yes. Hey, Kathleen. Hey, Kathleen is another person. She's out there chilling with some six-figure earners. You start to surround yourself with different people. Surround yourself with people who are where you want to go. Show up to ForexNChill because you want to go a certain place. Show up to ForexNChill on Mondays and Wednesdays. Yes, Mondays and Wednesdays is hosted by Lindor, the direct mentor for Gigi. He's doing ForexNChill on Mondays and Wednesdays. Show up. And this is for people who are an IML. If you're not an IML and you're not on his team, it's not, you won't have access. But when you sign up and you get start to get the education, you will have complete access. I know millionaire friends all over. Yes. Yeah, I know. Hear Kathleen's voice when she gets on. Hey, pretty. But you guys, he's sharing his story because a lot of y'all may be in a place where you feel like I cannot.
Hey, Mahogani.
Hi, Kathleen. Hi, Kathleen. How you doing over there with the six-figure earners?
Oh my goodness, I'm doing so great. I don't want to leave, man. I'm with Eric and Eric's wife, and I met everybody. All the team here doing great. And tomorrow we are going to one more last training seminar, and then we head back out.
Nice, nice. These are life-changing events, right?
Very, very, extremely life-changing. It's a big difference when you actually meet real people and, you know, hug and hold hands and talk. And, you know, I met Andrew, Eric, Robbie, Gigi, Stevenson, Terrell.
Wow. Anybody don't know, Terrell was trained by Lindor, and Terrell is an amazing six-figure trader in like 7 months. 7 months. Buckle down, 7 months, six-figure trader. She mentioned Eric. I know Eric, he got on the scene and just started popping money. Just by showing up, being trained, listening, learning, IML online, IML Academy, listening, being open, mindset, being available. Super new, what is a PIP? Okay, let's go in order. So what time on Monday and Wednesdays? 8 p.m. EST. That is if you are on Lindor's team. If you are on his team, you have access for Monday and Wednesdays ForexNChill. And it's posted in our group, and he posts on his Facebook page. If you're in our group, you know what Facebook page that is. Use MT5 or MT4. From what I know, MT4 is what everybody uses. The broker doesn't matter. MT4 or MT5 is a platform. Has nothing to do with your brokers. You sign into your brokers through MT4 or 5. Your brokers, each broker has their different spreads. MT4 or 5 does not tell you what your spread is. They don't determine that. They just reflect what the broker has determined as your spread. So you can use MT5. So many people are still on MT4. MT4 is a 13-year-old product, and MT5 is very new, but most people still use MT4. I haven't used MT5. I can't give you information on that. But just know that they don't control your MT4 or MT5 does not control your spread. That's through your brokers. You have a platform, MT4, MT5. That's what you do to mark up your charts and trade. Your broker is signed, and you sign into your broker through MT4 or 5, and they determine your spread. Currency, USD currency. USD currency, yes, and not all brokers offer MT5. Just know that. Not every broker offers MT5. And then also MT4 is just the most popular. It was introduced MT5 like 9 years ago that I heard, and it's just something that people don't use. I'm going to answer your other questions later. Yes, I don't know. Let's just see. Is Walter ready?
Yeah.
Go ahead, Walter. You ready? You've been so patient and you didn't fall asleep.
Nah, I didn't fall asleep.
Okay, go ahead.
All right. Oh, there you go. Wow. Now you want?
Oh, now he want to show up.
Would you
Oh,
like?
I've been here.
Why
I've
you
been
show?
here.
I called your name. I said, Jamie, you ready for your divergence?
Oh, I do apologize.
Yeah.
Okay.
Yeah.
You know, you get your rest in out there. I understand. Would
Well,
you
you know,
like-
I like to follow after Walter because Walter, his vernacular and his strength is just awesome. So, you know, Walter, if I would have the pleasure to follow behind, that would just be an honor for me.
Okay.
All right.
In that case, this is going to be brief because you all can hold on. All right, this is going to be brief because you all can check the ForexNChill on GG. Wait, hold on. Who cranking up? Let's mute that. What is that? Somebody mute them, please. All right, thank you. Okay, so this is going to be brief. This is going to be quick because you all can follow Gigi and subscribe to her YouTube channel to see the detailed pattern video. It was at the end of one of the ForexNChills, or probably like 3 weeks ago, or 3 or 4 weeks ago, and it has details for every pattern. But I just did this real quick. I actually did not come prepared. So, all right. So you all just learned that the market moves in 3 ways, which is impulse, correction, continuation, impulse, correction, continuation. All right. So let's get rid of that. Get rid of these. Hold on, Eric. Hold on. Let me know later. All right. So
It is kind of hard to see your screen using the blue markers. Please, can you change the colors?
what would you like, sir? What colors would you like?
Probably a yellow would do, more visible.
Okay, I got you. I'll make it yellow for you. I have no problem doing that. Yellow.
I confirmed that yellow is good. Thank you. I appreciate that.
How you like that?
Beautiful.
Yeah, much better. Thanks.
All right, great. So I'll retrace them all as I go. So this is as far as it allowed me to go unless I hit replay. And that's actually something I do. I hit the replay to back test patterns to see what moves came after certain patterns. Like we got an impulse here. Impulse, bearish flag, continuation. Then a bearish flag, continuation. As you all start to study the market, you'll notice that these flags come in different shapes and sizes and forms, and some of them are beautifully played out, and some of them are just ugly. So, but right here, I'm gonna start from here, and this is as fast as it's gonna go. I'm actually gonna forget the replay. Okay, so let's scroll all the way back, and where are we? Okay. Perfect. All right, there we go. So impulse, we were looking for our flag, but we didn't get our flag for the continuation. Instead, price started scaling up and it turned into an ascending channel. Well, within this ascending channel, after price was moving up and down in between these walls or these lines, however you would like to identify them, price got to the top of this channel and started slowing down even more. So this made an ascending channel inside of an ascending channel. And then you got a drop, retest, came back up, impulse, correction, continuation, correction, continuation. So let's say if you were a veteran or a pretty skilled trader and you recognized price started to fake out with these wicks or stop hunts. People like to identify them as stop hunts. So you identified those. Let's say you got in at the top. After that large flag. After that large ascending channel. Sorry. 346 pips. Mahogany mentioned more confirmations. 9 and 50 crossover. And then your MACD signal line crossover through your histogram. And it's also dark red. This is 15 minutes. So that would have been with those two confirmations and knowing this pattern and knowing where you are in the market, that would have been 346 pips with you always want to, have your stop loss at the top of the pattern. That would have been like a 40 pip stop loss. I think that's pretty good. That's something I would have took. Also, to keep in mind, like when it comes to larger channels, you all can start to observe that price evens out. It closes. You see how these close? These candles close no higher than the previous high. You just have wicks. So that this wicks just show where price has been. But it's not about, it's really more about how the candle closed. Wicks are important, but these candles, the way these candles close will tell you a lot more. So the candles close, price even out, and it dropped. So let's continue. All right, right here, I found a pretty large bilateral flag. Sometimes these would be harder to identify, but this is what I considered it because I took into account this large impulse right here and then just considered this a bilateral flag. So a bilateral flag is a flag that it goes from a bearish or a bullish flag and it turns into another pattern. So at first this was a flag. So basically from here up until this point, it was still a flag. Let me draw the yellow. Draw the yellow and highlight that. Okay, so from there to about this point, it was a flag. Just an expanding flag. But you all need to make sure that you are flexible with your expectations and strict with your rules. So once you do back testing, which was something I was going to go over as well, but that's just you going, okay, you learn the skill set, you learn the rules that apply, and you go back a year, a full year, no slack, no shortcuts, nothing. Every time you see an impulse, flag, continuation, you mark it, you write down data or what happens with, your MACD and your signal and your histogram, if those are the two things you choose to use. So that's literally what I have done to learn patterns. Well, with this bilateral flag though, this turned into a triple top, a triple top. And the larger the pattern, the larger the move will come after the pattern. So from here, what, 375 pips just by knowing the pattern. And so here go another triple top. This triple top didn't play out. Uh-oh. Okay, I'm gonna edit that one. This triple top didn't play out as well as that one over there did. But you know, you gotta be flexible with these expectations. So it didn't play out how it did. I mean, you got an impulse, descending channel. Let me highlight that. So you got an impulse, a descending channel, not your pullback, not your correction continuation. Got your reversal, and then you got a descending channel, and then another impulse up. Now, this is where you'll, start to get good. Price starts to reject. So this could have been some level of resistance somewhere. Yeah. Price, like she said, looking left, price struggled in this area. So I could take a line array and just, that's my field. Okay, there we go. Take array. Is that visible? Can everyone see this?
Yes.
Okay.
Yeah.
Great.
Yep.
So yes, this is where price struggled. You know that all these everything you learn will definitely play into a big factor of how you trade and how and the high probability trades that you will come across. Like this could have been one of them. You know, you got your reversal pattern and it did as expected, but price slowed down. It didn't move as impulsive. And that's another thing that you'll learn once you back test is how the pair moves. GBP pairs typically move fairly impulsive, and this wasn't that impulsive. So you could have expected a reversal. Plus, on a smaller scale, maybe like a 5 minute, this was a double top right here. Price wicked out, and you see how your candles closed, barely above the previous, but it didn't surpass the wicks, and it fell down. So let's see how many pips that fell. This one fell 165. So it was 165 pip move to the downside. Let's get this. Here we go. A double top on a larger scale. Price slows. It just slows down. It fell, but it didn't fall impulsive. It fell kind of corrective. Like this was fairly slow. You see the difference in these impulsive candles? These are fairly larger candles compared to these over here. So it slowed down and then it went into a larger channel. And as we got further to the right of this channel, let me highlight this larger channel. As we got further to the right, you see patterns in patterns. So you have a descending channel that will lead to a move to the upside, which led to a ascending channel, which was fairly slow. Price dropped to the bottom, and it went right back into an ascending channel. Then we got a drop. So say you got in after a retest. 251 pips. This is after your 9 and 50 crossover and your MACD and signal line dive through your dark red histogram, along with a reversal pattern, price slowing down, wicks to the top. So, yeah, there you go for that one. Let's see. Who's that? Oh, that's my computer. Like I said, I did brief ones. This actually is a triple top. Price fell, impulse, correction, continuation, price slowed down. So,
Quick question.
yes.
Now, when you said like triple top or triple bottom, what is that what is that leading to? What are you is that a reversal or?
Yeah. Triple tops and triple bottoms are reversal patterns. So this triple top right here led to a down move, an impulsive down move, and triple bottoms will sometimes lead to up moves. These are actually really tricky to identify because you can manage to see a lot of different things, but like at first I didn't even recognize it. At first I thought it was just a simple ascending channel, but I see a series of different channels within them, and price is respecting. Let's see.
Okay. All right. I was just curious. I was just kind of curious because you keep saying triple top, triple bottom.
Right.
I was insinuating.
That's fine. I'm pretty sure some people wanted to know as well, so that's cool. But
Appreciate that.
no problem. Price typically respects a certain area when dealing with these kind of patterns and doesn't surpass it until around the end. Now, let's say this pattern decided to move a little bit more like, I gotta change that color too. So let's do white. Yeah, let's say this pattern decided to move a little bit more like this and extend. That could have easily changed this could have easily changed into a descending channel. But this was short. This was a short corrective downtrend right in here. And then it fell impulsively. So impulse, correction, retest, continuation to the downside. And after you got your continuation and your correction, you got another continuation, but this was impulsive as well. I mean, this was corrective, so price started to slow down. With these kind of markets, you want to stay out of these, like seriously, because these are test your patience. Now, if you are, a pretty patient individual, then, this won't matter. But you want to kind of avoid these kind of markets, especially when they slow up like this. But we got our pullback, continuation down, and then we got our descending channel, which will result into an uptrend, like I just mentioned previously. A lot of wicks to the top, fake out, price getting weak. So go into an area of consolidation and end up falling. Let's see, what other patterns can we identify? Oh, see, this was around the end of the year. That's why it started moving so slow. So typically around December, like end of December, towards the beginning of the new year, the market will slow down. I guess they go on vacation or something. Like we gotta identify this right here as a triple top. I mean a double top actually, which led to an impulsive move down. Now, one thing that one of our mentors teach us is that before every impulse is a pattern, number one, and number two, the patterns will tell you what happened before news. So with this double top right here, and I got an impulsive move to the downside. Not only did I get an impulsive move to the downside, but I got my 9 and my 50 EMA crossover, a bearish engulfing. I don't know if you all are familiar with that, but that's just that's a sell candle that engulfs or that is larger than previous candles. And then the bullish engulfing is a buy candle that is larger than the previous candles. So I got a bearish engulfing, a 9 and 50 EMA crossover, MACD and signal line crossover into the histogram. this is right before news. And a lot of people caught this based off, this knowledge. So they held on to this 2 days, and look at this drop. This was news. This was a flash crash. Right here, this candle. 1,000 pips in 2 days and 8 hours. That's the power of market structure and patterns. So after that, price started moving up correctively. It's been moving up correctively ever since, rather. Then we get an impulse. Like I said, as you all practice, you'll get better with this. On the higher time frame, this is a real clear impulse with a pullback. And then we got a continuation to the upside. 267 pips. And then we got, I don't know if you all can see that. I didn't even think about that, sorry. But that's a nice bearish flag or an ascending channel. My rule is, if you all use the Fibonacci, if the flag goes past the 618 fib level, I consider it a channel.
Could you go ahead and do the Fibonacci right there, please?
Yeah. So let's say, let me find a good one for you. I guess I can do this one. I'll do over here. Yeah. See, that was like a 1 retracement. That's crazy. All the way to the 1. So, yeah. If my fib, if the flag that I have stops here at this level for me, I consider that a flag. But if it goes past this level, that turns into a channel. That's my golden rule. That's a rule for myself. Because I noticed that would just be a deep retracement or, an extended flag. But it looks more like a channel because it's so extended. And typically the flags that you receive or that you would see after the impulse is just taking back 50% of the move. So if you get a 200 move, a 200 pip move, and you get a pullback, you can expect it to retrace 75 to about 120, and then it'll continue. But if it go further than that for a deeper retracement, then that's when I consider that a channel and not a flag. Is that clear?
Yep.
Okay. So, got an ascending channel, which turns into a descending channel, which is another reversal pattern. Like, these expectations, they must change all the time because we don't make this market. And we got an impulsive move up 252 pips. Now, one thing to stay aware of when dealing with 9 and 50 EMAs, sometimes you'll get your move, you'll get your signal way before. You got your 9 and your 50 crossover right here. It didn't dive below into dark red histogram. It was a light pink kind of. Let alone that, it also stayed above my histogram the entire time. So if these two lines stay above this histogram, that's indicating a buy is still valid. And when it's below, that's indicating a valid sale. So it dove through here, but price was corrective on the market. So this market structure is going to overrule these indicators. These are just extra confirmation for higher probability trades. And so it dove through, still was weak, light pink, crossed back over here to continue on up, and that's what it did. And I think that's it. So yeah, that's patterns. Any questions?
Yeah, I wanted to ask you how did you know
on that last pattern you showed that when the EMA crossed back to the downside, that it wasn't price reversing and it's just being a pullback.
How did I know when it?
You see how the EMA kind of crossed a little bit, just a little bit.
Right here?
Yeah.
The reason I know that is because of my pattern, number one. Like, you know, when you taking these trades, like I said, it's just high probability. You really don't know. But what confirmed it for me is how tight this 9 and this 50 EMA are together. When you see them cross over, they separate for that trend. You see that?
Okay.
You see how they separate once they cross, and then you got the uptrend? Yeah, see, when they crossed here, they didn't separate much. It was still kind of close together.
Okay.
So, yeah, that's – and then, you know, like I said, this is a descending channel. So, let's say – okay. So, let's say replay. Cool. All right. Let's say, you know, we didn't have what we just had. And this is what you see. You see this crossover, right?
Yeah.
You see how it's separated, correct?
Mm-hmm.
But what are you in? A descending channel, right?
Yep.
So you really wouldn't be looking to sell here. That's a little risky. Now, don't get me wrong. Some descending channels are going to turn into awesome sales. That's great. But you got to understand that you're looking at the higher probability, and that's not what you're being taught. You're not being taught, well, it crossing the descending channel, well, the crossover ruled the channel. No, you're actually being taught that the market structure itself and the patterns are going to overrule these indicators. So these can be tight all day. You know, these can be weak. But if they're not in line with your patterns or your market structure, then they're invalid.
Okay.
So, yeah. That's that one. Any more questions?
Question.
Y'all better get him in now because he's talking knowledge. He keeps on reiterating so many things that are key. Y'all better get him in now.
Get thrown off too with those deeper.
Can you stop this right here? Where you have this impulsive move to the downside.
Right here.
Right. And then you have this flag and it changed direction here. Is that correct? Instead of going down, it changed direction and it went up, right?
This is actually, it's just a descending channel. It's not a flag.
Okay.
See, check this out. Let me show you. This was the flag here. You see that?
Okay.
But your expectations have to be flexible. Strict with your rules, flexible with your expectations. That went from a bearish flag to a descending channel.
And what
So what's the difference?
What's the
between
difference?
Between the flag and the channel?
Well, the difference with this flag and then this channel is this is a sailing flag. This is a confirmation that a sale should come, which it did. But price slowed down when it after the sale and then scaled back up and then scaled back down. So this extended and turned into a descending channel. The averages for the closes of the top of these candles or at the top of this wall for the descending channel actually started scaling. It started scaling down. So the averages was lower than the previous high. You see that? Like, let me zoom in. Okay, right here. So we got this where market rejected there. And as you go further right, the market, price rejects lower than the previous. So it starts averaging down. And that turns into a descending channel. And like I said, it's not going to happen all the time where you're going to get, the impulsive move up. The impulsive move up, the reversal, but it's more than likely. You go back, you do your retesting and your back testing, it's more than likely that you will see more reversal patterns happen after. I mean, more reversal impulses or, you know, stronger impulses going in the opposite direction after these reversal patterns. So, yeah.
How do you set your PIP goal for the week?
I typically go after about 75 to 150. That's for me because I know that's possible for the week. And I just work on being persistent with that. And as I obtain that as a goal, I just keep adding more. Set my goal higher, set my standards higher.
Okay.
The objective, but see, this is the thing. You can catch a 200 pip move and obtain 350 pips just by the concept of stacking orders. But go ahead.
No, I see what you're saying. And
Yeah.
then my next question would be, how do you stack?
Yeah, see, that'll be on entries, and I have not mastered that, so I'm not gonna guide you in the wrong way.
Is there such thing as stacking and then twin trading? Is that what it's called? Are those two different things or the same thing?
I am not sure. I don't know.
Stacking and twin trading is the same thing. Twin trading just means two, but we say stacking. You're getting into a trade, one pair, multiple times. You're getting into that trade multiple times. Sometimes you're getting into that trade on a flag. Once you have that impulse, so like say you get in a trade and you get in on the impulse. You catch it before it impulse. And then it impulses, it flags or corrects, same thing. And right before it impulses again, when it does that breakout, you would put another trade for that same pair in. That's twin trading, aka stacking.
Okay.
The one thing that you want to be aware of is that your risk management when you're doing these things, the type of lot sizes you're putting on it. Usually when you stack it and you're getting in on the flag, you're doing multiple entries. If you're getting in later, your lot size is going to be smaller. It's definitely a technique, and Gwen has an excellent technique on it. I'm sure we'll have her cover it on a different ForexNChill. But yes, they both mean the same thing.
Okay, and how do you determine your PIP goal?
Let me let Walter finish first, and I'm going to answer that. Okay, Kay?
Thank you.
You're welcome. Go ahead.
Oh, that's it for me, unless they have more questions.
I have a question.
Yes.
Okay, so just to make sure I understood this, a descending channel basically indicates a bullish reversal. So like it's going to go from a downtrend into an uptrend, and then the opposite is true with an ascending channel?
Yes. So market moves in three ways: impulse, correction, continuation. Now, if you keep in mind, the correction just confirms that the market should be going in the impulsive move up for this specific correction. So, like I said, when it comes to me and my flags, if it goes past the 618 fib level, I consider that a descending channel. All in all, the descending channels and the flags are the same, but it depends on how it looks after an impulse. That's going to determine if it's going to be a correction or a reversal. So if I have this after an impulse, I'm expecting for price to continue going up. But if I have this ascending channel scaling up, price slowing down, I'm expecting a reversal.
Okay.
You see?
Yes.
But see, this is the same thing as this, except the impulse is what determines, what could possibly happen. It's what happens after the impulse. So if it's a upward impulse and I have an ascending channel, I'm looking for the reversal. But these two right here are the same thing. It's just this turns into a ascending channel and not a flag. The flag confirms my continuation. These channels is something that's confirming a reversal is coming, potentially.
Okay. Got it. Thank you. That makes sense.
You're welcome.
Thank you for that last explanation. That made a big difference. When I hear people say that the market only moves in three ways: impulse, correction, continuation, in my head, I'm expecting it to always be in that order. But a lot of the charts I see, I get the feeling that you can have a corrective pattern even without having a preceding impulse. Is that so? And how do or is that something I'm just going to pick up with time, or is there a tip you can give
That's
me?
something you're going to pick up with time. Now, the question is, with these corrective moves that you're noticing after an impulse, is it a flag or is it a channel? And what happens after that?
Well, I'm only now beginning to understand the difference between a flag and a channel.
Okay.
I'm fairly new, so I've just done like 8 pairs.
Okay.
Trying to mark up 25 charts. I've only reached 8 pairs yet, and I haven't yet gotten confirmed if what I'm seeing is what I'm supposed to see.
Okay.
So your explanation has gone a long way.
Okay.
The whole class tonight has gone a long way in helping me understand.
That's good. Okay. Well, another thing that you also want to keep in mind, Mahogani was stating, entering at the top or the bottom of reversal patterns instead of waiting for the break and the retest is so risky. The reason it's so risky is because, let's say you learn everything, you get everything down pat, and you start taking into account zones. Like she mentioned, the zones that she marked up. A reversal pattern can, it look like it's going to play out, and it'll still continue up just to validate a zone. That's why it's more risky. So if you keep those zones in mind, as well as the reversal patterns, and you see a reversal pattern kind of far away or like in the middle of nowhere right before a zone, I would say wait for the break and then the retest instead of entering in at the top. This is just general knowledge. But I would wait for the break and then the retest, then the continuation. If it's in the middle of nowhere and near a zone, they make new zones or they could validate old ones. So it's just a tip.
Thank you for that.
You're welcome.
I remember Isaiah before you end. Isaiah Williams, I believe you had a question. Do you still have a question? Okay, I'm guessing he doesn't. Okay.
Yeah, I think he pretty much answered me about the retracement. Yeah.
Okay, good.
Thank you.
You're welcome.
All right.
So if all minds and hearts are clear about this, of course, this is recorded. Like he said, he went through this on a different ForexNChill. Make sure you go to YouTube and search ForexNChill. When you search ForexNChill, you'll get Gwen's channel, and she has the ForexNChill there. Do you remember which Friday that was that you did the pattern?
I think it was 3 Fridays ago.
Okay. So check back three or more Fridays ago, and look at his other one, because it's just like this one, but he went into a lot of detail and and he showed patterns. And he is a pattern king. He shows patterns. Like I feel like there are times where I'll see a pattern and I'll get stuck in a pattern, but like Kathleen said, patterns change. And I showed you guys how I was looking at something and it went from a bullish triangle flag to a ascending channel. They change on you all the time, and you have to be, like he said, strict with your rules but flexible in your expectations. I think that's a great saying. I'm gonna borrow that.
You can have it. I'm not selfish.
But I hope I know you guys got a lot of information from what he had to share about patterns, because patterns are key. Patterns will, like he said, will help you get in and out of trades. As he said, these confirmations that we use, like the crossing EMAs and a MACD, these are just confirmations. Structure, of course, will always be the ruling factor. These patterns will override these confirmations. Again, these are just confirmations. We're looking for as many confirmations as possible when we get into the market, and these tools are just additional confirmations, but they do not override your structure. We're gonna have Mr. Jamie.
Yay.
Jamie do divergence. Are you there, Jamie, or you left me again?
I'll never leave you.
Oh.
Stuck with me like luggage.
Now talk about confirmation king. Divergence is his specialty. He's going to teach you guys about that.
Hey, good morning, good evening, good afternoon, wherever you're at in the world. This is your boy Jamie right here in the Kingdom of Saudi Arabia. And I'm blessed enough to be able to come share with some information with you about divergence and what IML has done for my family and I. I actually started back in January of 2018, and dealing with that, I tried everything I could do to get this thing right, but I will tell you this, that didn't work out so well, but I never gave up, I never quit. And I just said, you know what, I'm tired of being sick and tired. So I made a decision to get a mentor. So when I got a mentor, I stopped trading live. Right. I'm talking about loss after loss after loss. Now, I did have some wins, but unfortunately, my losses outweighed my wins. Well, when I reached out to this gentleman, and he became my mentor after we talked, and he told me, he said, straight up, Jamie, you need to stop trading. You will not trade live anymore till you double your demo account. And I'm like, what? I mean, I can't earn as I learn. I mean, this doesn't matter. He said, if you want to be a successful trader, you'll listen to what I'm saying. So come to find out, my mentor actually had a mentor. That mentor's name is Stevenson Lindor, who we call the GOAT. And so Stevenson Lindor was a 7-figure trader. My mentor is a six-figure trader. I think I need to listen to not just him, but also his predecessor. So I just said, you know what, let me submit and learn this skill craft. And learn this skill craft has definitely changed my life tremendously. And using the products that IML has, especially IML TV. Guys, if you're not looking at the recordings on IML TV of these great trainers, i.e. Stevenson Lindor, Mario's, Wave Trader, find yourself 1 to 2 people that you want to watch on IML TV. And that way you can start learning from them, because everyone has their own success in using Forex and using a skill set or using a way that they trade, okay? So find that one person. Me personally, I love market structure. Market structure is the basis of all Forex, in my personal and professional opinion. We've got the clouds, we got teacup, we got gold cup, we got levels, we got this, we got that. But it all comes back to one thing: market structure. If you master market structure, you will be able to use market structure in anything dealing with any form of trading. May it be trading Apple, cannabis, crypto, whatever it is that you want to trade outside of Forex, you can use market structure. Yes or yes? Okay, yes, outstanding. Okay, so let's go ahead and get down to it. Now, what I like to use is something called divergence. All right, can everybody see my screen?
Yes, sir.
Yep.
All right, good deal. Now, one thing about market structure and one thing about the market speaks a different language. If you don't understand, let's just say a person from Japan, all right? If you don't understand that language, you guys are going to have a problem communicating. Would everyone agree with that?
Yes, sir.
All right. Okay, so in order to do that, you would either have to learn Japanese or have a translator, or you can get something on your phone as an app to be able to translate for you, right? So we have to use technology. And the same thing with the market. The market is speaking a language. And with that language, we need to be able to understand what she's saying, okay? And I use her talking about Forex. I use her as talking about the market. And with the market, it tells a story. I'm telling you, it tells a wonderful story, but you have to be able to understand what she's saying. If you learn market structure, you'll understand. So our job as traders is to box in price and react to it, all right? And the most important time frames is the monthly, weekly, and daily. So when we look at the monthly and weekly daily, we're looking at the overall trend of the market. Think of yourself 30,000 feet in the air in a great airplane, you're sitting in business class and you're looking down at the earth, you can see the contour of the planet, right? But as you start descending, you start seeing a little bit more clarity of where you're going. Okay, so now we're going to the weekly. So we're going to the weekly, and all this is going to make sense when I get down to divergence. But the market is telling a story. So we need to make sure we understand what the story is telling us. All right? So again, we're boxing in price, and we can see this is an overall downtrend. Yes or yes?
Yes, sir.
All right, if you can see, this is just a blank chart, right? This chart is blank. But look, as we're starting to descend a little bit further, we're going down here to the daily. We're starting to see a lot more detail. So we're seeing details. We're starting to see details. Uh-oh, sorry about that. Let's go back to that deal. We're starting to see more detail. So as we start seeing detail, you want to start looking at the market a little bit differently. Then we go down here to the 4 hour. 4 hour. Wow. Now we're starting to see something a lot different. It's like, well, dang, Jamie. You know, we see we had an impulse here. Then we had this here. Let me go ahead and change this color to white so you guys can see it a lot more clearly. Then we had a nice giant correction right here. But dang, Jamie, I would love to go ahead and get this. But you know what? I don't trade off the 4 hour. And you know what? You shouldn't. But the 4 hours is a powerful time frame, in my opinion. Between the 4 hour and the 1 hour, that's what I like to do to look at the overall trend of the market. Now, if I told you, if we saw this, and this is about 300 plus pips, almost 300, so it's 393 pips. Who would love to have caught 393 pips in 15 days? Oh, nobody? Oh, okay.
Right here.
Oh,
Yeah, I need that.
Only 2 people?
Me.
Right
Oh,
here.
me? Oh, okay.
I need them pips, fam. I need them pips.
Yes, me.
Okay. I mean, the chat room should be blowing up. I mean, you know, we got 120 some odd people on here. I mean, if y'all don't want 300 pips, you know, we can just stop right now. What you think, Mahogani? Should we stop?
Yo, stop playing, man. Stop playing.
Oh, okay. All right. I'm just saying, you know what I'm saying? Okay, so let's go ahead and kind of clear this up a little bit. And I'm going to show you how divergence can be used. One thing I enjoy using is the MACD. All right, the MACD is a very powerful tool. All right, when you look at the MACD, it shows you momentum of the market. And see, one thing about the market and these market makers, they like to play tricks on you. You know, they want to play games. And I don't have times for play. It's all about the money. All right. Yeah, you took an L on this, right? Well, I'm going to show you how to go ahead and take that L and turn it to a W. Okay, Mr. Tyler? One thing about the market is when you learn how to use market structure and you box in price, the market, again, will tell you a story. Not only will it tell you a story, It'll tell you what it's doing. When you can say yes, can somebody predict the market? Yes, with a very high probability. Now, as you can see, price right here is going what? What is price doing right here?
Going down.
It's going down, right? Exactly. It's going down. So we would think on a person that doesn't have eagle eyes is that it's going to go down. It's going to continuously to go down. But momentum is telling you what? Outside of Mr. BP.
It's about to go up.
It's going up, right? That's right, Mr. Dyson, it's going up. So if momentum is going up and price is going down, realistically, if you didn't see this over here to the right, what would you think is going to happen with price?
Person.
It's going to be a reversal. So that means that price is going to go up. So as you can see, since I saw this divergent, price is going to change, momentum is going to change. We will go ahead and box in price. And how we do that is I find those points and I box it in. Everything that's happened to the left of this screen doesn't matter to me at this present time. Again, this is the 4 hour. As soon as I see a divergence on the 4 hour or the 1 hour, those are the best times to see a divergent. I go directly down to the one, I go down to the 10 minute. Now this is 28 March 2019. We'll go ahead and reset. We'll hit go to. We'll go to the calendar. 28 March. That was a Thursday. That's a good day to trade. And as you can see here, this is where, because you know, when you go down to the 4 hour, every candle is considered 4 hours. Yes or yes?
Mm-hmm.
Now, what we will look for is look for the best entry. Well, dang, did I not already draw this up previously? And did it not hit my trend line? And what happened here? It threw a wick. It threw a wick. It threw what they call tweezers. Oh, man. Oh, sorry about that, guys. It threw tweezers. Everybody see this on the 10 minute?
Yep.
This is when you look for the perfect entry. Well, Jamie, I want an even tighter entry. I want to be tighter. I want to be so tight. I want to be tighter than the ticks behind, right? So we're going to take this down to the 3 minute. I love the 3 minute. The 3 minute is like my perfect entry for any trade. I love the 3 minute. Let's see if we can get back to the 3 minute, and we do. Perfect. You see, it respected my trend line. There's no way I could have made this up, guys. I would have found my perfect entry using my MACD. As you can see, the MACD crossed here. This was my entry. I'm sorry, we move that over to the right just a tad bit. It crossed over here. Of course, your stop loss would have been here. Let's see how much of a stop loss that would have been. That would have been a 7 pip stop loss. 7 pip stop loss. Ladies and gentlemen, when did price ever hit my stop loss? When did price ever hit my stop loss?
Never.
That's crazy.
Never touched it.
My stop loss. When did price ever hit my stop loss? Yeah, I'm being extra right now because I want you to see the power of the Now, I was only looking to be in this trade for 20 and 30 pips because I am a scalper at heart. But seeing divergence on a higher time frame, oh my goodness, I'm just gonna keep going and going and going and going and going and going.
This is retarded.
I've turned into a swing trader. And we're still going. And we're still going.
This is
I don't know about you, but being in the market for 15 days in the blue and tagging the you know what out of her, this 300 pip move was actually 750 pips. Because as Terrell has always stated, always know where you are in the market. So let's go back here. They said, well, Jamie, you know, you're using the MACD. Okay, great. I'm using the MACD for one specific purpose. I want to see where market is really going. So let's move up a time frame. Let's go to the 1 hour. I'll always know where I'm at in the market. And every time she did a pullback, we would have tagged her. We would have tagged her here. 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 Excuse me. Let me go ahead and delete this. So she would have got tagged 1, 2, 3, 4 times. I would have been in 5 different positions. So just for, you know, giggles, I said 300 pips, right? Anybody can count really good? 300 plus 200 is what? That's 5. Plus 150?
650. 650.
Plus 150?
800.
8.
Yeah, 8. Plus 170.
970.
970. Golly. That's crazy.
So 970 pips. Now, of course, if your account can handle a lot size of this, 970 pips. I mean, I don't know about you, but an extra $29,000 in my pocket would have been great. Okay, now that's somebody that has an account that can handle that. How many pips was that? 970? Let's just say you just put it in there and you let it ride. I don't know about you, but an extra $9,000 would be great in my pocket for 15 days.
Yes, sir. Sure would.
Now, this is what you call bringing time back into, putting time back into your life. All right? Look, I'm gonna tell you right now, the average income in America is anywhere from $23 to $2,700 a month, average income for American household. All right? So we're just gonna have it for, you know, shits and giggles. We're just gonna say that it's $3,000 a month. I don't know about you, but that's 3 months of pay. Oh, my bad, I forgot about taxes, because, you know, Uncle Sam got to get hit. So that 3,000 just turned to 20 what? 2,800, $2,700. So what it took 2 weeks to do for us as being traders would take somebody 4 to 5 months to create this income. This is time frame. I don't want you to just look at the money. I want you to look at the skill set. The skill set is what's going to bring you the money, but you have to be willing to put in the work. Now, fortunately, I'm here in the Middle East. I have the time. I don't have my family here. It's just me, myself, and I, and the big guy upstairs. And I'm blessed to be fortunate enough to be with Gigi, Steven Lindor, Terrell, Mario, Clint, Mahogani. You got, oh my God, you got Walter. I mean, no disrespect, Walter, but in my eyes, he is a kid to me because I'm like 20 years a senior. But I mean, to listen to somebody like Walter, be able to show me, see, it's all about being able to humble yourself and listen to someone that's way younger than you that can teach you something. I'm not 50, but I ain't 20 either. But to be able to listen to somebody that's doing something better than what I'm doing, yeah, sometimes you got to put pride to the side and learn the skill set. I mean, come on, you got people like Eric. Jeez Louise, this dude's been trading, what, 3-4 months? I'm not even going to speak on how much money he's brought in the past, what, 60 or 90 days. It's astronomical. We got people like Robbie. Oh my God, he's beast. All right, Wynn's brother. I mean, geez Louise, he don't even know what he's doing. He's killing the game. What's going to happen when he really learns how to do this? What? Ignorance is on fire, and this is the skill set. To be honest with you, I am now off the chain, the best of the best, and I've been with some great companies. But for them to be able to teach you a skill set that will get your time freedom back, man, that is the most precious thing in the world to have. The recruiting side is just doggone secondary to me. That's just the cherry on top of my sundae. But to be able to put yourself in a position where you can not only do this for yourself, but you can teach your kids, you can teach your nieces, your nephews. I mean, Clint's always told me this, and it's just awesome. He said, you know, you die twice. You die in the physical, and then you die when somebody forgets your name. I don't want to be that person that dies twice. I only want to do it once. And I hope that is the same mindset that you will have when you put yourself in this position, that you can put 3, 4, 5 hours a day into these charts, put 3, 4 hours into this skill set. You may not be able to do that from the jump, but build yourself up with that. How can you sit up there weighing 300 pounds and you want to lose 20 pounds, but your behind never goes to the gym? You want to talk about it, but you don't want to be about it. I don't have time for talk. I got time for action. Actions speak louder than words. And we have to put ourselves in that position to learn the skill set. We have to be students of this business. And if we're not students of this business, you're not going to be successful. Within the next 7 to 10 years, ladies and gentlemen, I want you to hear the words that's coming out of my mouth. Within the next 7 to 10 years, there's only going to be 2 classes of people. Either you're going to be rich or you're going to be poor. I hope you don't take the latter. My name is Jamie. I'm bringing this to you straight from the Kingdom of Saudi Arabia. Pending any questions, that is my presentation on divergence.
I have a question regarding where's the best place to learn divergence?
You can go and follow this individual. His name is Jimmer. He does training on IML TV. I don't know the exact times on that.
I look for it.
Yes, but his name is Jimmer. He's one of the IML educators.
I've seen the name, but I've never listened to his classes. Okay, thanks.
Yes, yes. Divergence is awesome, especially when you know market structure. Does anyone else have any questions? No problem, ma'am. Anyone else have any questions? Wow, everybody got it that fast, huh?
Now or forever hold your peace. You got Jamie, who was the king of divergence, on here to answer some questions.
Could you do it with another pair, or do you not have time?
I have all the time in the world. Okay, you know what? Who was that going to ask that question? Was that you, Crystal?
I'm going to ask you if you could do it again as well.
Okay, what pair would you guys like for me to look at? Any pair?
Gold.
Gold?
Great Britain.
Oh. Okay, we're going to do gold and Great Britain, if that's okay with you, Mahogani.
Of course, of course.
All right, let's look at gold.
Yeah,
So
can you
this
look
is
at GU?
Okay, unfortunately, I'm sorry, because we can get GU and we will, but I know that gold and Great Britain was the 2, and Mahogany gives me that time. I'll go ahead and look at GU, okay? Let's go ahead and click the screen. Okay, so what are the 3 most important time frames in the market?
Monthly, weekly, daily.
Monthly, weekly, and daily. And we as retail traders, what is our main priority? What is our job?
Box and price
And reactive.
Box and price and react to it, right? So that's what we're going to do. We're going to box and price and we're going to react to it. So we got the monthly, we got the weekly. All right. I'm a stickler on a big stickler when it comes down to clean charts. Okay. Big stickler, big stickler, big stickler. I like nice clean charts. Nice clean charts. As you can see, guys, I use the same colors every time I'm on a certain time frame. The reason being is because I know what my 4-hour, 1-hour, weekly, daily trend lines are. Let's go ahead and refresh this. And as I'm always looking, I don't look at the MACD on the higher time frames. Now you can find divergence on the 4-hour, you can find divergence on the daily. I don't look for divergence on the daily because it takes a little bit too long for the divergence to happen. Because if you see it on one time frame, it'll definitely show up on another. Does that make sense?
Yeah.
Yes. Yes.
Yes.
Yes. Yes.
Good deal. Good deal. All right. Again, I like nice, clean charts. I don't want her to go anywhere. I want her tight, tight, tight. Maybe I got OCD. Who knows? All right, there we go. There we go. Yeah, that looks a lot better. All right, so now I got my 4-hour. Let's go ahead and reset this. Let's look at this. Now this is when I turn my MACD on. I want to see what's going on. Googly googly. Look at this. If you see it, say I see it. Do you see it?
I see it.
Who see
I
it?
see it. I see it. I see it. I see it.
I think y'all see it. Now. All right,
I
Miss-
see it.
Since you said it first, Miss Ruby, tell me where to draw. Miss Ruby. Miss Ruby. Okay, Miss Ruby, she's a little
Yes,
shy.
sir.
Okay.
Yes, sir.
Okay.
I
All
hear
right,
you.
Miss Ruby. Tell me where to draw it at, Miss Ruby.
Oh my God! No, you didn't. No, you didn't put me on the spot like that. Okay, let me see.
You said you saw it.
I do see it, but I'm learning.
Okay. Well, listen, Miss Ruby, we're gonna go ahead and give you a break this time, okay? I'll get back with you later. Mr. Dyson, what do you say?
Hey, you see that red wick right there?
Mm-hmm. You talking about
Draw
this
that
one right
thing.
here? You talking
No,
about this
not
one right
that
here?
one. Not that one. Not that one.
Not that one?
Oh, you talking? All right. Well, yeah, that's divergence right there, but I see it happening in real time.
Oh, you see it happening in real time? Where you see it happening in real time, Mr. Dyson?
All right. So look, if you take it from that wick right there, that red wick, and draw it over there to that last candle going up.
You talking about this one right here? Or you talking
No,
about
no,
right here?
at the bottom, that wick that you touched. Yeah, from there to the green candle, and then you got from that to the other, like that, and then you got the MACD going down.
Well, let's look at that then, sir. Let's see if that's really divergent. I don't think I would call that divergent.
So
I
what
think I
made you
would call
draw
that
it from right there?
I actually see divergence right here.
See, but what made you draw the white line on the MACD right there? Wouldn't you draw it from the top?
No, from bottom to bottom or top to top. Now you can have divergence here. Now you see how price is going down, but the MACD is going up. Momentum is going up. Price is coming down.
Okay.
Now, there was another person that said they saw something to the left. Who was that? It was a young lady.
I have a question. Why did you go so far back for the diversions?
Why do I go back so far back?
Right. Couldn't you have taken it from that green wick up to where you have that doji?
Are you talking about right here? Are you talking about from here to here?
Yeah.
Okay. Well, if I'm looking at it here, isn't momentum going up?
Okay. Got you.
So that's confluence. I'm looking for non-confluence. I'm looking for opposites. That's what divergence is. Price is telling you one thing, but momentum is telling you a different story. So let's put it like this. Can we keep it 100 with the family?
Yes.
Yes, sir. Yes, sir.
Okay, good. How do you feel when somebody lie to you?
Disrespected.
We got a problem, right? Okay, well, I'm gonna tell you right now. Right here, price is lying to you. But momentum right here is telling you the truth. I'm not gonna deal with the liar. I'm gonna deal with the person that's telling the truth. Yes or yes?
Yes. Absolutely.
That's what divergence is. So, and I'm looking at it on a higher time frame. Now, you can see divergence on the 1 hour. I like looking at the 4 hour and the 1 hour because it tells me the bigger move. But if you really look at it, if you know market structure, isn't this a descending channel? And what happens on descending channels?
Reversal.
Reversal.
Is that not what happened here?
Indeed.
If you don't know market structure, you won't see divergence. You see how this is all starting to come together?
Yes.
This is flat patterns. This is divergence. This is what Gigi has taken the time to teach us. This is what Stevenson Lindo has been preaching for Lord knows how long. This is what Clint teaches. This is what Mario teaches. This is what Terrell teaches. This is what we are taught. But you got to learn market structure. You don't see an EMA. You don't see an SMA. You don't see none of that. The only thing I have is the MACD. Because I'm learning market structure. My intent is not even to have the MACD. To be honest with you, my intent by the end of this year is to have a naked chart and not use any form of an indicator because my eye is the best indicator. And that should be your goal also. All right? Now, the young lady that made a statement, I'm sorry, I didn't see her name when you popped up, but she said to the left, you know what? You are 100% correct. There is divergence here to the left. This was divergence right here. That was going up and price was coming down. Excuse me, price was going up, but momentum was coming down. Now, this is 25 March 2019. I really want to profile this one because of one reason. And this is the reason right here. 25 March 2019. Let's go to what time frame did we go to?
The 10 minutes.
Outstanding. We go to the 10-minute. Now that was what? 25 March 2019? That was on a Monday. 25 March 2019. Now, let's see who was paying attention to me earlier. Where's my stop loss? What are we supposed to do as marketers? We do what? We look
left.
We look left. So this is my highest point. Here's my entry. I have wait a second. This is my stop loss. Not familiar how that works, but this is my stop loss. Eric, how many pips is that? 20? Because gold is done differently.
Yeah, that's 20 pips.
That's 20 pips. Appreciate you, Robert. So 20 pips stop loss. It hit my stop loss. It didn't hit my stop loss. It came close to my entry right here by these two wicks. What's that, 7 pip wick on the 10-minute? I would have been in this trade.
Since then, it dropped about 300 pips from that entry.
From that entry, using the 4 hour, seeing that divergent from the top, I would have been in this pair this whole time. So I don't know about you. One day, 22 hours. That's what? Is that 139 pips, Robin?
Yep.
Oh, well, I'm greedy. I want all that. And that's when the swing comes in. Again, I'm looking for a couple of pips, but look what happened. We ended up getting what? What's that, 346, sir?
Yep, 346.
So 346 pips on gold. I don't know about you, but 346
Well,
pips
that's
on gold is a
350
lot.
for real.
Yeah. And that's on the 10 minute. But I don't enter on the 10 minute. I actually enter on the 3. Go to. There's my entry. I'm sorry, I'm gonna have to refresh this again. Try this one more time. Where's my line? 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 Where'd it go?
Try zooming out.
Okay. Thank you, whoever said that. There it is. There we go. There we go. Enter off the 3 minute. I follow my MACD. The MACD is going to tell me where to go. I would have probably, knowing me, I would have got in here and put my stop loss there. And the reason I can do that because my account size is a nice size. So I could have held that on the 3 minute. But for a person that doesn't have an account that can handle that type of a pullback on gold, 20 pip pullback, you would have just followed your entry here, which what the MACD tell you to do. It told you to go for the sale, right? Right here. So you would have waited, how long? Wow, 3 hours? You could have set yourself, but again, look what I had here. I had my trend line. You could have set this as an alarm here. You can say once per minute. Create, the alarm would have set off and told you, hey, go ahead and get in. Once that alarm would have went off, you would have got into the trade. You could have got in probably right here. Your stop loss would have been here. It would have never look. It would have never touched your stop loss. And this right here, you had a 19 pip stop loss. 19 pip stop loss for 350 pips. Hey, I think that's a great risk to reward. Yes or yes?
Yeah.
Yes, sir.
Yes, sir.
Man.
Now, is this not impulse? Here? Oh, let me delete that. Sorry about that. Impulse. Here's my correction. It's off the 3 minute now. There's my continuation. There's my impulse. Ahí va. There's my continuation. There's my correction. Ahí va. And then here is my continuation. Here's my correction. That's my flag. Of course, we know what that is. Nice descending channel. It came back up, right? This is a crazy thing. Look at this. I love market structure. Look at this. Where did it begin? Come on, guys. You can't make this up. What did it do? It threw a wick right into that trend line and kept on going down. And this is off the 3 minute. Flag patterns are flag patterns. I don't care where you at. All right. Flag patterns are flag patterns. I don't care where you're at in the market. I always know where you're at in the market. Comfortably, you could have been in this trade. Oh, Jamie, the MACD, we went on top of the MACD. I need to get out. Slow your roll. Go to your 1 hour. And the 1 hour would have told you that you were okay. All right. GU was the next one, right? And then after that, was it GU? I want to make sure I don't miss somebody.
She just said Great Britain, but I just said a specific pair like GU.
All right. Move.
That's GA, fam.
Oh, my bad. I don't know. When I hear GB, I go straight to GA. Appreciate it. So y'all could have got a freebie on GA. GU. All right. Ooh, 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 ooh. Ooh, sorry about that. Ooh. Yeah, that's gonna be pretty. Okay. All right. So, all right. Boom. Monthly, weekly, daily. Yes.
Yes, sir.
Monthly. Should I? Nah. No, I want it tighter than that. I'm gonna do something different. See how many pips that is. Oh yeah, that's 1,000 pips. That's perfect. Okay. So monthly, weekly. Yeah, that is beautiful. Oh yeah. That sounds like the Kool-Aid man. Hello. All right, pink. All right, weekly, daily. Isn't it interesting how I just keep doing the same thing over and over and over again? Anybody ever get bored making money? I won't. Let's go here. Nice downtrend right there. Oh yeah, that's pretty.
Yeah, I'm actually waiting on the break and retest on this pair right now.
Well, don't let them fool you. Oh no. Okay. Boom. Boom. Double click. MACD. I don't see anything that jumps out at me at the 4 hour. So let's go to the 1 hour. Oh, I see something. Anybody see it? Anybody see it?
I think I do.
Who said that?
Crystal.
Hey, Chris, what's up?
Hey.
Talk to me.
All right. So I think I see on the bottom there's a green wick.
Are you talking about this one?
You see where your arrow is? Right there, a
My
little
arrow.
bit to the left.
To the left, right here.
Over a little bit to the right.
You talking about right here?
No, sir. Closer to where price action is currently at,
Oh, you're talking about right here.
but down.
Down.
And then go over a little to the left. A little bit more. A little bit more.
Are you talking about this one right here, this doji?
Mm-hmm.
Okay.
On the left of it, that's a little bit shorter. It looks like it's going.
So you're talking about right here.
Yeah, but now that I look at it, I think momentum is actually going up as well. So that probably would.
Exactly. Exactly. Great catch. Now you see what happens when you draw it out. Exactly. That's great, Crystal. That's exactly right. You want to draw it out so you can see it.
What about all the way left?
All the way left?
Yeah.
That's my Isaiah, is that you, man?
Yes, sir.
What's up, man?
Just trying to make some favors.
Oh man, you got more than favor, man. You got more than favor, Isaiah. You got a powerful name there, bro.
Yes, sir.
You know what, Isaiah? Prosperous. That's exactly right. You know what, Isaiah? You're 100% correct. On the 1 hour. I don't know about you, but 3 days to get 100 pips? Yeah, I'll take that. I'll take that. I'll definitely take that. But how about if I told you there was another one? Yep, there you go.
Okay.
If you do have time, you think you could go over NZD USD?
Miss Mahogany, I got time?
Yeah, you have time for one more. Then we want to give people a chance to mark up charts. But yes, you have time for one more.
Okay. All right, guys. Y'all heard it now. I got time for one more. So I think, Rob, was that you that asked that?
Yeah.
All right. What's good, man? How you doing, bro?
I'm chilling, trying to learn all of this so I could be. I just want this to be my last year working for real, so I'm trying to take it all in right now.
I feel you. I feel you. I feel you. Now go down here to my 10-minute. You see that? That was 9 o'clock yesterday morning, East Coast time. 9 o'clock. You had 0 drawdown. 64 pips would have took you out for the end of the day. But since you knew market structure, you know it's going to at least come to this trend line. Yes or yes? So if it comes down to this trend line, 75 pip move. 75 pip move off the 10-minute. But you know, Jamie, he likes to get down dirty. I want to get in the trenches. I want to get funky. I want all this. I don't want to miss nothing. There go my perfect entry right there, that doggone way. I take it all the way up. I don't want to miss nothing. And what? Look at this. Look at this. If you don't want to take the ninja, if you don't want to take the sniper shot, you want to go ahead and take the safe shot. Look at this right here. Here's your safe shot. Here's your safe shot. Right there when the EMA's cross right here. But if you really want to be safe, hey, I'm sticking to Lindor's rules, which I love his rules and I still follow them today. There was your real safe entry. There was your could not fail entry off the 3-minute. So if I want to take the safe entry, I still would have been satisfied with 48 pips and 49 pips in 6 hours. You know what 49 pips can do to a family or to do a single mother with 3 kids? That's closed for the summer. That's created for a summer. You know how much of a hero their mom would look at them, or how much of a hero you as a father would look to your kids? You like Superman. Matter of fact, you can whoop Superman's 100 with this skill set. Yes or yes?
Yes, sir.
All right. That last pair. What was it? Talk to me, Rob.
Hold on, Jamie. I have a question.
Yes, yes, ma'am. Hey,
Hey.
What's going on, man?
So you like the wicks as opposed to the engulfing candles that I guess to confirm that it's a good place.
I use both. I was just basically just giving the basics of divergence and the simplicities of divergence. I'm not saying that the engulfing candles are not important, but what I'm looking at is showing people disparity. I'm showing them where they can see where price is doing one thing and momentum is doing another. And then they can use engulfing bullish candles or engulfing bearish candles if they choose to. Again, that's just another form of a confirmation. Did I answer your question?
Yes, you did. Thank you.
No problem.
The last pair was NZD USD.
NZD USD. All right. Now understand, guys, if you want to try to use divergence on lower time frames, i.e. anything under the 1 hour, you're probably only going to pull anywhere from 10, average, anywhere from 10 to 20 pips. All right. So I just like to use the higher time frame. All right. All right. So let's go. Move on Jones. Get rid of Mackie. All right. Talk to me, Rob. I feel like I'm talking to myself in here. Like I'm in a black hole.
All right. Below the previous low, you could put resistance right there.
Okay. So I'm gonna go what time frame, bro?
After that, go to the daily.
Okay. I'm going to the daily. What
I mean
happened to my weekly?
The weekly. I'm tripping.
All right. All right. Okay. Let me reset my chart.
After that, you can make another one right under that low of the red one. Actually, that wick.
That wick?
Hold on, give me a second real quick.
All right.
Let me put this up on my chart.
Do you normally draw your trend line on the weekly chart?
You know what? To be honest with you, I wouldn't draw anything on this chart this present time because I don't see enough for me to draw it. I will tell you what I do see. What I do see is a flag. This is what I do see right here. So
I was about to say it's going into consolidation right now.
Right, exactly. This is what I do right here. This is what I see right here. So I really wouldn't do nothing on this. I can't see anything that jumps out at me. I don't like spending no more than maximum 2 minutes on a chart. I don't see anything. I see a bunch of consolidation. So I'll go down to my daily. All right. Ooh, see, that looks a lot better. See that? Now this is telling me to do something different. So this is right here consolidation. So I'm gonna take that wick out. There we go. Now just waiting. But what I do see here, because it's jumping out at me here on the daily, I see what? Where's Miss Natalie at? Miss NXT
I'm
Team
right
Power.
here.
Talk to me. Talk to me. Help my brother out right here. Help my brother out right here. What you see right there?
It's exhaustion. It's about to make a reversal.
It's about to make a reversal. So this is called a what? This is called a what?
A descending channel.
It's a descending channel. Descending channels mean what?
Reversal.
Mean reversal. So we saw this on the daily, right?
Yep.
Oh, so if we saw it on the daily, do we not think that on a higher time frame, on a lower time frame, that we could look at possibly anywhere from 174 to come back up here to our monthly 200 pip move?
Mm-hmm.
Now, guys, I'm giving you a trade of the week. Let's go to the 4 hour. Oh my goodness. Oh my goodness.
Can you repeat that, please?
Miss Ruby, you know I got nothing but love for Miss Ruby, y'all.
Thank you.
Miss Ruby, this is the trade of the week right here on NZD USD. Right here. So that's my 4 hour. Shoot, I'm not even looking for divergence no more. But I could, because it is.
Look at that divergence, buddy.
Now tell me you can't see that.
Yes, I can see it.
Okay. Because guys, you've been seeing it and don't know what you were looking at. But now somebody brought it up to you.
Right.
Somebody's bringing it out to you for you to see it. Okay?
Okay.
See, that's how they put secrets out. They don't hide secrets. They put it in plain view. And that's what the market has done. So here's the divergent. Here you see momentum is going up, price is coming down. I see probably maybe one more little drop to about right here-ish. right there. I see that right about here. Right there. I see it hitting here. See it hitting here. Again, that's just my opinion. And I see it going all the way back up here. So this is on right. That's what I see.
Okay.
And that shows you how powerful divergence is. So that's what I'm going to be looking for. And we see that on the 4 hour. I'm going to go ahead and mark it. Go ahead and mark this area. I'm going to set me an alert. I'm going to go down to my 10-minute. I'm going to see where I'm at. Uh-oh. 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 I might ride this son of a gun back down. Oh, Lord have mercy. Oh, yes. Oh, yeah. I'm riding this down. Oh, I can't wait till Sunday night. I'm going to ride this down Sunday night. I'm going to keep my eye on this and wait for a nice candle. Wait for this come up, and I'm going to take the snot out of her. I'm going to go right up. Worst case scenario, if she comes down here for 39 pips and she comes back and hit this trend line for 60 pips and has to want to say, you know what, Jamie, I'm not ready to go up yet. I want to go back down and visit great grandma in Mississippi and get me some Sweetwater cornbread and Kool-Aid. I'm going to back another 61 pips. So I got up for 39 pips going down, 61 going up, 61 going down. 60 and 60 is 120. Plus 30, that's 150 pips. That's 150 pips for a week. Off of one hand. Why are we jumping all over doggone everything GHA, MOUSD? Guys, stick with one pair, master it, learn it. Make $100,000 off one pair.
Yeah, I'm
Rob,
focused on this pair and then go for this upcoming week. That's it.
There you go. All right, guys, I appreciate you. I'm going to go ahead and give the mic back over to Miss Mahogany. Mahogany, thank you for giving me the opportunity to share this on the platform.
Thank you, Jamie. Oh, thank you.
Thank you, sir.
All right.
For learning, you guys.
Thank you.
Gracias.
I
Thank
appreciate
you.
this.
Y'all got trades for this week from this coming week. Because exactly what he said, he gave y'all write it down because of the divergence and then writing it up because of divergence. So I got 2 trades. Y'all better keep an eye on this. Yes, this webinar typically is life-changing every week. Learning something new. Learning something new. That will conclude the recording portion because what we're going to do now is answer a question. People are going to be marking up charts. And I'm going to, like I said, answer some of these questions that people were giving me. But thank you guys who is watching the recording for being with us throughout this time. Rewind as much as possible. Learn, 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 learn. Thank you for visiting us on ForexNChill. This is April 12th. This has been Mahogany Jones. You've had Jamie on divergence. You've had Walter with patterns. You had Andrew sharing his story. And stay tuned for next week's ForexNChill.
Thanks, Mahogany.
You're welcome. You're welcome. So
Thank you.
you're welcome. So we can end the
Thank
recording
you.
now.
Thank you.
Thank you.
Thank you.